The U.S. economy held up much better than expected in the fourth quarter of last year, with cooling inflation fueling consumer spending. The European Central Bank froze its interest rates once again with a note that it was too early for rate cuts just yet. Seung-jae has more.
According to the U.S. Commerce Department on Thursday, the U.S. economy grew at a faster pace than expected, growing at a 3.3% annualized rate in the fourth quarter of last year. The figure beat the Wall Street consensus estimate of a 2% gain. The U.S. economy for all of 2023 grew at a 2.5% annualized pace, also well ahead of the Wall Street outlook and better than the 1.9% increase in 2022. The U.S. Bureau of Economic Analysis said that the increase in real GDP reflected increases in consumer spending, exports, state and local government spending, non-residential fixed investment, federal government spending, private inventory investment, and residential fixed investment. The latest data from the Commerce Department also showed that U.S. consumer prices have been easing. Consumer prices in the fourth quarter of last year rose at a 1.7% annual rate, down from 2.6% in the third quarter. Core inflation came in at a 2% annual rate. Meanwhile, the European Central Bank decided on Thursday to freeze all three key interest rates for the third straight time after its last hike in September, keeping the benchmark deposit facility rate at 4%. The interest rate on the main refinancing operations and the interest rates on the marginal lending facility were also kept at a 4.50% and 4.75% respectively. ECB President Christine Lagarde said the ECB board believed any talk of cutting rates was premature, given the uncertain economic outlook and risk of wage growth pushing inflation higher in the first quarter. Seung-jae, Arirang News.